Both our stock indexes are up for the day. 20-year bonds are up also. Gold is down. If you haven't purchased our book, we're in our 7th printing. Tells you all about what we do, explains it in detail. We're quite proud of it and have sold lots of them. You want to support what we do at the channel, 2 ways you can do it. You can purchase our book. There are links in the show notes. Go to chartingwealth.com if you're listening to our very popular audio podcast. You can find the show notes there. We post everything every day. And you can also support us as a Patreon member and sponsor, and you get all sorts of good stuff. And it includes a Q&A where we will be taking your suggestions for stocks you would like us to look at. We'll do that once a month, provide that to you, along with things like our Bitcoin training, our Bitcoin chart, how you can chart Bitcoin. Yes, we do have a special proprietary chart that is very good at charting Bitcoin. Our quarterly charts that we look at, we'll be looking at those at the end of the year, so in less than, well, about a month. We'll be looking at that at the end of December. We have that training available too, and if you're in our intermediate sponsorship, you get a 15-minute once a month telephone call where we help you really, really focus on your training and the knowledge that you need. And you get a free book. So anyway, thanks so much, folks. Let's jump into these charts. So far, Heikin-Ashi candlesticks, even though we have 2 up days for the week, the weekly chart still shows the average pace of price movement is down. We have the derivative oscillator losing downward momentum, price percent oscillator still heading down. All things being equal, market tends to move in the direction of the largest chart, which is still decidedly down. Now, let's go from the weekly to the 2-day on the S&P 500. We see that the latest candle, this is the first day of the latest candle, we see that it is actually moving up. Now, wait a second. Yes, that is correct. The other candle ended on Monday. So what we see happening now, first day of this latest 2-day candle, pushing through our 2-day trend line, still below the weekly. We see the price percent oscillator heading up. Derivative oscillator, however, still negative. It's been losing momentum and it's negative. That is very interesting, even though we see price movement up. We go from the 2-day to the 4-hour, and that's where you can see the progress over the last 2 days of an up movement, crossed over in the morning on Tuesday, pushed through the 2-day trend line, still well below the weekly. So again, we saw the derivative oscillator and price percent oscillator cross at the same time. Typically means that crossing is going to go on for a while. It's strong enough to do that. So we'll watch and see what we see. 2-day, weekly still primed. If indeed before the 2-day gets rotated over going up, if we see throughout the course of the week over Wednesday, Thursday, and Friday, a crossover going down, of course, that would be a jumping in point to make more virtual cash on a virtual trade going down. So we'll just be primed to watch that. What do we see going on the Qs? Up 0.34%. Again, both the S&P 500 and the NASDAQ 100, QQQ, up 0.34%. But again, a red down candle, derivative oscillator losing downward momentum, price percent oscillator still heading down. We go from the weekly to the 2-day, and again, that latest 2-day candle, the one that formed last on the 22nd, that candle is up, pushed through the 2-day trend line. We have a green spinning top like the S&P 500, just the first day of the latest candle. Still negative on the 2-day chart, but derivative oscillator losing downward momentum. We'll continue to watch and see what we see. We go to the 4-hour chart. What do we see there? Well, 2 days of up movement. 4-hour chart crossed over going up on Monday afternoon, continued up Tuesday, both in the morning and afternoon. So again, pull back. We'll wait and see if we have a crossover going down. So we go from the Qs into 20-year bonds. They were up also 0.11%, getting closer and closer to a weekly vertical crossover. It hasn't happened yet. Derivative oscillators crossed over, price percent oscillator. And again, remember, we don't call a weekly candle until the end of the week. You don't call a 15-minute candle until the end of 15 minutes. It doesn't matter how it starts off. It matters how it ends and what it draws. So far, up. We see price movement trying to push through the 2-day trend line on that weekly candle. What do we see on the 2-day trend line? Well, of course, backing off some. First day of this latest 2-day candle, we see basically a doji, means indecision, tending down, has pushed through that 2-day trend line. Now remember, 2-day trend is up, the weekly trend is down, so we don't have a trade at this point in time. 2-day and the weekly have to be moving in the same direction. We're trend followers. We're not gamblers or guessers. And of course, you can't make the market do what you want, but you can damn sure follow a good trend. That's what we try to do. So what's going on? Well, maybe the 2-day is going to cross back over going down. We shall see. We'll just watch, wait, keep the powder dry. What's going on with the 4-hour chart? It has crossed over, actually crossed over in the afternoon on Monday. What it's really done is slide sideways. It was down in the morning on Tuesday, up in the afternoon. So again, derivative oscillator gaining downward momentum, price percent oscillator heading down. So we'll just watch and see if the 2-day trend line provides any support, or if that 4-hour chart blows through it. We'll watch on Wednesday. Lastly, we go to gold. Gold, the only thing down for the day, 0.60%. As we've said for many weeks now, we had that weekly vertical crossover going up on gold for the week ending the 5th of October, up the 3 weeks after that, then sort of sideways and down. Since then, really more sideways. It's still within what it went up over the Heikin Ashi candlestick week ending the 22nd of October. All the movement that we've seen's really been pretty much within that candle. So again, I would call that a sideways slide. Derivative oscillator losing momentum. Price percent oscillator flattening out. On the weekly, still up a little bit. 2-day chart, what do we see? Now this is where it got interesting. Trying to cross over and then pushed away. So the first day of this latest, and you know what? I really shouldn't be drawing that yet. Maybe I did that prematurely. The reason, it's the first day. I don't like to go ahead, as I just said a minute ago, calling things. I went ahead and did that in my show prep. Probably not the best thing to do. We're going to leave it in a confirmed up move until we confirm that crossover with the closing of the candle on the 28th. So then we shall see. So again, we'll just wait. 2-day does appear to be forming a down candle. Derivative oscillator, still negative. Price percent oscillator heading down. And we go from the 2-day to the 4-hour. And of course, the 4-hour chart really started spiking down in the morning on Tuesday, down in the afternoon, blowing through in the morning the weekly up trend line. So continue to keep our eye on gold and see what we see. One thing that I like as far as this latest trend is the 4-hour chart was pretty decent. Remember how for 2 years, up through about, February of this last year, we had that 4-hour chart as a total trading chart on gold. It was beautiful. It's gotten a little crankier and not as clean as it was back over the last 2 years prior to about January, February of this year. Maybe it'll start working again. Love total trading charts. What we mean by that is when you have a chart that just is beautiful. Whichever way it goes, the market tends to go. It could be a 4-hour chart. It could be a 2-hour chart. It could be a 1-day chart. It could be a 2-day chart. I encourage you, practice with charting time periods and see if you can find total trading charts. If you can, please share those with us. We always appreciate that kind of valuable knowledge. Okay, folks, that's where we are as we wrap up the day. Again, you want to support us, buy the book. Go to our link in the show notes to our Patreon page. Become a Patreon sponsor. You're our super special people, and we so appreciate all of you. God bless you, my friends. All the best from the whole team here at Chart.